Welcome to Who Taught You, a show where we discuss a plethora of things. And today we're going to discuss who taught you about insurance. And so the type of insurance we're going to talk about today is like bank insurance. And I really did not want to discuss this right now because it's like we're in the heat of things where banks are being taken over by the federal government for losing monies. And before I get into that, before I get deep into the tea, hunty, I want you to go ahead and like and subscribe and share. Listen, be a blessing to somebody. They may need it. So first, I'm going to tell you I'm outside with the elements. I'm outside with the elements, and I want to show you my fit. Okay. Look at my fit, okay? So I decided to bring you outside because the weather is getting nice, isn't it? And we need to be outside and get some of this vitamin D, baby. Get that D, all right? So we're getting the vitamin D because, it's good for our bodies. And, you don't want to be deficient in any vitamins, right? So if not, we're going to take us a little multivitamin or what. And, I got my little curls in, got my hair straight. It will not be for long because I love a natural. All right, let's not forget what we came here to discuss today. And we came to discuss about insurance. So I want to tell you that for me, this is very important, and it should be very important for you too. A lot of people, because the federal government came in, shut down some of these banks, or not really shut down, but took over some of these banks because they were not managing the monies properly. It was very scary for a lot of people. People thought they were going to lose their money. Some people probably did, but some people didn't even know that the bank provides insurance. There is certain insurance that each bank may have. And people were trying to close some of their accounts quickly, and the banks was getting scared. They ain't want y'all to shut down the shop now. They wanted y'all to come ahead, put your money in so we could loan it to other people, so we could make investments. That's what they wanted to do. So I want to tell you, when I was trying to set up my emergency fund, and everybody out there should have an emergency fund because things always happen. Things will happen with your cars. Wait a minute, I hear a cat crying out here. Who crying? We have some cats back here, some stray cats, and they come on, the outside cats, and they like to be fed. So I hear somebody crying, but I guess they stopped. All right. Don't interrupt now. Rude. You know what I'm saying? Okay. So getting back to what I was saying. Everyone should have an emergency fund because an emergency fund is for any type of emergency, any type of things that could happen, like something with your car, something with your home, something legal, something non-legal. You could just find yourself in a bind where you need some extra cash, right? So you should have an emergency fund, and usually it is said by most financial advisors that you should have 3 to 6 months. Now, let me just give a disclaimer. I am not a financial advisor. For anything finance, please go and seek out a professional advisor. I do work in the role as a finance manager, but I am not your financial advisor. I'm just telling you my experiences and my take on stuff. So please, for anybody, please go find you a professional who could give you the advice concerning your money. All right, getting back to it. Okay, so getting back to your emergency funds, some people cannot save 3 to 6 months. Let's just be realistic. They have too many bills. A lot of things are happening in their lives, and they cannot afford to save that. So let's start off with a baby emergency fund, like $1,000 to $2,000. Try to save that first, okay? So getting back to me. When I was looking for a place to put my emergency fund, because I was taught that you're supposed to put it in a high yield savings account, a money market account, not like a regular account where you go to like a bank that you walk in. Like most of the banks that have the higher interest are online banks. Excuse me. So what I did was I went on bankrate.com, checked them out. They're very good for any type of rates for loans, mortgages, car notes, savings accounts. Go there and check them out, okay? Credit cards and so on. So I went there and I checked out and I researched, different account and high yield savings account, money market account. So one of the criteria, there was a couple of criteria I was looking for. How it was insured, that was number one. Is my money easily accessible? And what I mean by that is, if you have a regular bank, like say a Bank of America, a Wells Fargo, a Chase, not some Capital Ones, they have branches. Let's say, a regular bank, right? Say you have, or it could be a credit union. You're going to put your emergency fund in a high yield savings account, and most likely to get the best interest, it's going to be one that's online. And most of the time, you have to figure out in an emergency, how can I get my money? Can I get it where I transfer the money over? That may take 2 business days, in some cases. Or with the Fed now, that might change everything. You might get it right away, honey. But you want to know, is it accessible? So with me, I wanted that it had check writing privileges. However, while doing my research, just checking out many different companies, I was able to find that some gave you a debit card that you could actually use for the high yield savings. And, you just want to make sure that in an emergency, you could access your money right away. That was very, very important to me. And it was my money that I'm going to save in there insured. Very important. Some people, this is the first time they ever heard about insurance for your money, as far as banking, until this disaster happened, right? And in Silicon Valley. But it has been around for a while. So I want to kind of break down the different type of insurance there is for bank accounts. Okay, so the ones that I know about, and I had to take a piece of paper because your girl, listen, I can't keep all this information in my head, so I had to write it down. Let's talk about FDIC insurance. So FDIC insurance is called the Federal Deposit Insurance Corporation, okay? And what does it cover? It covers, just like it says, federal deposit. It covers deposits only, okay? And what are the limits? The limits are $250,000 per depositor per insured bank for each account ownership category. So when they say the ownership category, if you have more than one ownership category, then you could get $250K for each account. You understand? If you only have one ownership category, then you're just gonna get $250, and that's it. If anything goes wrong with your deposit, it insures that. Okay, and so some examples of what it insures, like checking, savings account, money market deposits, CDs, cashier checks. So it covers all of that. So when I was looking for to put my emergency fund into account, I wanted it to be FDIC insured. Now I saw different options as well. Like for instance, there was Fidelity. I went to Fidelity and I checked out their money market savings account, which is a high yield savings account. They offered a debit card with theirs, which was very good because it's easy access, right? But the one that I was looking at, it had the SIPC insurance, which is different from the FDIC insurance. So what is that? That's the Security Investor Protection Corporation. Okay, and it covers like brokerage accounts, okay, and the limits are 500,000 and up to 250,000 for cash, and it covers like stocks, bonds, treasury securities, CDs, mutual funds. Okay, so when you're going into a bank, Okay, and if you got that point, if you got about a 250 or 500,000, you want to make sure that the account that you have it in is fully insured, so that if anything happens to your money, you can get it back. Okay. All right. There is another one for all the babes out there and the gentlemen out there who love to put their money into a credit union. Credit unions are great. They are very great. And they have their own type of insurance. It's called NCUA. That is the National Credit Union Share Interest Fund. Okay? Insures members' deposit in federally insured credit union. So if it's a federally insured credit union, it covers your deposits. The limits are up to $250,000 per person, per institution, per owner category. And you'll see that owner category a lot. Now, I'm the type of person, I believe in feeding you, and then I also believe in teaching you so that you can go out there and get the information. So I'm not going to always give you all the answers, all the facts. We have the world of YouTube. You can search it. You can call up your bank just to find out, to make sure your money is safe. Because listen, we work hard for our money. We can't afford to lose it, right? Okay. So I want you, this is your homework, to go out there and research this. See what insurance covers your money. You know, some people like to put their money in life insurance because they say, okay, it's covered no matter if the stock market goes up and down. Do your research. Do your research. And having a life insurance that has the insurance on it, it's good. But do you want your money tied up in all of that? Do you want to not get all the interest you can? Listen, interest rates are going up. We want to save all the coins, all the money, everything, okay? So another thing I wanted to point out, I talked to you about the insurance. I told you go out, good people, and find out more information on the world of YouTube, on the financial pages, on the government sites. You go out and you search it, okay, to protect your money. I just want, in these hard times where interest rates are high, people have credit card loans, they have car notes, they have other types of loans, and the interest is just going up and up and up and up. If you can, try to pay those off quicker than quick, faster than fast, sooner than soon, because they are killing us in interest rates. Now, I do not have that, but at one time I did. Listen, I had to learn twice to get out of debt, okay? Listen, the lesson wasn't so good that I got it the first time, or maybe it wasn't me. The lesson was good, but listen, I was defiant, okay? So it took you a while to get into debt. I want you to be out of that. I am your cheerleader. Go out, try to work hard, get you a second job, get you a part-time job. Try to get you a better job if you don't want a part-time job, so that you could pay off this debt. The only debts I have, I've been very transparent, is my mortgage and my student loans. And I'm knocking off the student loan this year because I do not want to be a slave to the lender. I don't want them to hold me in chains no more, no more, no more. So we be getting to the money. Everybody mad. Isn't that how the song go? Anyway, my good people, I do not want you to forget to like, right, or subscribe, and share this with somebody else. I want you to be a blessing to somebody else. Send them the good news. Let them learn about how to protect their money, just like you. You can't, listen, it ain't no fun if your homies can't have none. Ain't that how the song go, right? So it was great speaking to you today. I want you to get out, have some fun. It's a beautiful Saturday here for me. I don't know what day you viewing this video. Okay, go ahead and put on your notifications so that if another video drops, you will know. You will be in the know, right? Okay, well, I am going to see you later, and I have to go now, so bye.